Then I'm going to show you why you should be investing in platinum. I'm going to pull up some situations, fundamental situations when you should have invested in platinum, and we'll look at the current situation to see if it's prone to calls for an investment in platinum. So this is platinum prices. This only goes back to about 1970. What's this? 1969 to the present. You see, present is about 846. It's been in a downtrend, but I'm going to show you something interesting right here. Let's see. So I took platinum. Actually, I went back to like the early 1900s. To gather data. Well, first, before I start, platinum, it's limited supply, so it's hard to manipulate the market. The main uses are auto catalysts, jewelry, industrial, medical. So there is a strong demand for it, and it's not that much platinum available. I think all the mining platinum ever discovered, can fit inside a living room or the typical American living room. But let's look at platinum back in the early 1900s to see what the investment trends have been, and to kind of determine what the investment trends are now. The key to this column here is platinum price per ounce. This is the Dow price. And this is the Dow divided by the platinum price per ounce, just to get a ratio to see if there's any correlation between the two. And these are averages, approximations, because of course the Dow ran the course of the year. So when the number is high, it calls for an investment in platinum. So you can see the year 1900, the Dow was at 60. Platinum 18, 60 divided by 18 gives you about 3. So that was actually a good number, in comparison to the time then. So 3 calls for an investment, especially when the Dow was overvalued. I think it was a PE of about 23. So just to show you, the Dow in the year 1900 was 60. Let's look, and you can bought platinum the whole way through because you see it's high. 3 to ratio, 4, 5. This is a good year to buy when it was 20. I don't have all the years, it's just too much data. It's hit 2, but still not a good time to buy stocks, so you would have stayed in platinum. Now 1918, this is when it hit 1. So this is when you could have started selling, and and you would have got a great return. So you see the Dow. The Dow in 1900 was 60. The Dow in 1920 was 85. So you would have held Dow stocks for 20 years, and you would have only got a less than a 50% increase in the Dow. Whereas if you held platinum from about 18 to 160, you would have You would have got about 9 times your money. If you would have bought platinum as compared to 900% versus a 50% in stocks. So you still could have sold platinum the whole way through, but it as you'll see, it gets less. This is when you should have been out. Plus the stocks were attractive in the 1920s, so you would have switched to stocks, rode that up till the Great Depression. And this is 13, so you would have got a quick double if you would have got it in 2021 for platinum. But let's scroll to the 1960s. That was the next big bull market where stocks were screaming, don't buy. I'll move further quickly so we can see the current time. So this is 11. This is a good PE in comparison. So the higher the ratio, not PE, the higher the ratio, the more likely it is, more call for a platinum investment. You would have got a 57, could have got some 88. Remember, the lower, but the better sell. Probably could have got some the whole way through. Could have got some 124. Now here we are, 2, 445, 1. I mean, you gotta sell at 1. Can't get any lower than that. Price per platinum is almost at the Dow right there. You know, it's a 1 point something, but yeah. So this is how it works. It's rather simple. So we'll scroll to the 90s. I mean, it's definite buys here. Now keep in mind, if the stock market is saying buy, you don't buy platinum, or you can buy 50-50, or you know, a percentage of both, but you really don't have to. You can really stick to the stocks. But 30, I mean, I think the stock market was screaming get out in 97, so you could have got platinum here, you know, 370, let's say. Look at this, 30. Look how much the ratio has increased over time. So of course, if the higher the ratio, the lower the ratio is going to be to sell. But you know, 30, 370, 15. I mean, you could have sold some there if you wanted. But you get 11, 10, hit 4. So you get back into these single digits. So it went from 30 to 4 for this ratio. So you could have got it at 380, sold it 220. I mean, this is how simple platinum investing is. Okay, so let's look at the ratio now, because of course this was 2008 and this was 1999. Sorry, I haven't been it's descriptive with the numbers. So then we'll go to now 2018. 2018, we're looking at 31. You know, Dow's about 25,000, platinum is about 800. So you're looking at a 31 ratio. Now, it always goes to single digits. It hit 4. So let's say it hit 6. So we'll take the price of the Dow and just divide it by 6. So we'll take that 25,000 divided by 6. So we're looking at 4,100 for platinum price right now when it's 800. So you're looking at a 500, you know, 5 times your money there. In the Dow, I mean, for the Dow to go up 5 times, you'd be looking at 125,000 Dow, which is not going to happen. So let's say the Dow, let's say it drops to 18,000, just to take what I say, six of that number. You know, if the ratio gets to 6, you're looking at $3,000 platinum from $800. So investing in platinum can be lucrative, as you've seen, similar to investing in gold. You know, but the thing about platinum, it's always been free floating. Gold was sold at a fixed price. So even in the early 1900s, I got this data from newspapers, but even in the early 1900s, there were platinum investors. And I mean, if you got ounces then at you know, $18 and you sold at 160, 10 times your money, 20 years is pretty impressive, when the Dow only went up 50%. Also in the 60s, I mean, it probably went up less than 50% with the inflation. Also in the 60s, I mean, the Dow here was, let's see, Dow 64 was 850, platinum 88. All right, you know, Dow in 1979 was 838. So you actually went negative if you had the Dow over that time, whereas platinum, I mean, if we look at the next year, 677, 445. So you got impressive returns, and you could just buy the American Eagle, the platinum 1 ounces. That's the great way to invest. And I just have this other chart. Where's this other chart? Just have this other chart here, and this is just platinum prices. Just shows you everything I said. But of course, this only goes to the 70s. It doesn't go to the you know, 1900s. There's no data out there. This is how small platinum, the interest in platinum investing is. But 99, you see this run here, you know, as I mentioned, and now we're in a downtrend, but you know, it's going to go up, and I think I said it's going to be what, 6,000, 6,000. That's a good range. If not, the Dow, you know, doesn't go any higher and stagnate. So we'll see what happens, but that's investing in platinum. Like the video, comment below what you think in terms of my analysis, if you liked it or didn't like it, and share it, you know, send the video to a friend. Thanks for watching. To subscribe for more financial content, please click the circular button where the red arrow is located, and also watch one of the top 2 videos up top.